Hello, everyone. Welcome back to another edition of Diamond's Edge. My name is Greg Diamond, editor of 10 Stock Trader. And this week, we're going to look at a few catalysts. Obviously, the Iran-Israel news over the weekend in terms of war tensions in the Middle East. We're also going to look at earnings and then the Federal Reserve, and then some time cycle stuff. I'm going to go over various scenarios, look at a few different markets in terms of what I'm expecting. Okay, so let's jump into it. This is a chart of the S&P 500 futures markets, and we've seen these big moves down, but big moves up, big move down, big move up. And obviously, when futures opened up on Sunday evening and over the night, I was watching closely to see how stocks would react given the news last week and then over the weekend, late last week and over the weekend. So, stocks for the most part didn't react too negatively to what's happened. They're actually up. We'll see if that can hold. Okay. But basically what we've had here is, again, you can see the percentage moves, down 1.5% or down 1.8, up 1.5, down 2, up almost 2, down 2, up almost 2, down 2. So it's been quite messy. All right. Now, if you're a very, very short-term day trader, this is really nice. Okay. But let's look at this on the daily level and see what's actually happening in the bigger picture. All right. And this is what I find that's important, despite tension, despite some tension in the Middle East, despite relatively sticky inflation, if you will, stocks haven't really reacted that negatively to it. We haven't seen that much volatility around it. Okay. And basically what that has done from a technical perspective is this, I've been talking about this for a couple of weeks now, is this has started to work off overbought levels within a strong uptrend. Okay. So, could we continue to drop lower? Yeah, we could. All right. You can see how this is, this market starting to rest on this blue line, which is a 55-day moving average. Could be very, very short term, but a support level to keep in mind. All right. Probably more important though. So look how the RSI is starting to slope down here. Okay. On the underside of RSI. Yeah, we had this divergence. And now we've actually, again, worked off overbought conditions up here. All right. And now what we see here is this line sloping down, this blue line. And then on the composite index, we have this is actually sloping up. This is divergence between the indicators. This is why I like to have the composite index relative to RSI, because you can get these kind of early warning signs. All right. So that is something, that I'm keeping in mind regarding the S&P 500. And, this could be a situation where we have what I like to look at in terms of a symmetrical move, where we have this, and we saw that on the hourly chart that I posted first. But I'll show you here. You can see how this really traded pretty nicely in terms of support, in terms of just a simple ABC correction. And then we can trade higher. All right, something to keep in mind. And I'll go over the more bearish outlook as well. But let me, so again, we can see very little volatility working off overbought levels. Now let me switch to the NASDAQ, which again, it's a little bit of a different pattern, but the same type of situation. Okay. Yeah, we have the strong uptrend. We saw some volatility in February into March. Here's that March high. Okay. March 8th high that we saw, particularly in semiconductor stocks. But the NASDAQ has just gone sideways. It hasn't done much. Okay. Again, despite sticky inflation, despite, the Federal Reserve not cutting rates, despite what's happening overseas in Iran, this is, so it is the market likes to discount things. Is the market discounting the fact, regardless of, what you think about the war, whatever, it's looking past those tensions that have already been there. And is it more focused on earnings? Is it more focused on the Federal Reserve at the end of this month? All right. So that could be what the market is looking at. But again, we can see how it's worked off overbought levels within the strong uptrend. And rather than a normal environment where you see this really big volatility heading into or right after overbought levels, all it's done is just basically gone sideways. So the major inflection points that I was looking for in terms of that have historically marked tops and or volatility is simply just worked off overbought levels within this strong uptrend. All right. So something to keep in mind. All right. Now here's a chart that I showed to 10 Stock Trader subscribers. Okay. And again, this is MTUM, USA Momentum Factor Fund, tracks momentum. Okay. You can see the strong uptrend. And again, once again, similar to the S&P 500, similar to the NASDAQ, we hit this March 8th high, poop, gone sideways. We've worked off overbought levels within a strong uptrend. You can see here the blue line, okay, that's where this is, again, diverging. Now look what we have here on the underside. This is sloping down on the RSI, while the same points on the composite index are actually sloping up. All right, so this is where I think it gets important, all right? The way that I see it, okay, so again, we're getting into earnings, and then we have the Federal Reserve at the end of the month, and then we have these so I had it here May 13th. This is around May 13th. This isn't necessarily going to be an exact day type of thing, okay? It could be first week of May, maybe the second week of May, where we see a major inflection point based upon multiple cycles, long and short-term cycles. So the key always is how is the market trade into one of these time cycles, okay? So, and you can obviously point out the catalyst as well, okay? Again, war, earnings, the Fed, okay? So are we going to see, basically I'm looking at three scenarios. That's the way that I'm looking at this. The bullish one is, this marked a low last week with Iran. The market looks past it. And we kind of see maybe something like this, where we break out of this range, retest maybe into the Federal Reserve meeting, and then we have a nice strong rally into the end of the month. So this is actually, extend to where we see something like this, okay? Then that would mean May would be some type of short-term top. I'm not saying that it's, the end-all be-all, certainly. I'm just looking out the next couple of weeks, okay? So that would be the bullish scenario that I would look for. It would probably catch a lot of people surprise. If you think about what happens and, fear becomes an issue and people want to sell, but if the market isn't going down around that fear, then, it's probably going to hurt. The market's going to hurt the most people. It's going to go up. So that's something I'm looking for on the bullish side. And then, the worst case scenario, if you will, is this just chops all the way into, first week, second week of May, and then we kind of have to figure out, all right, then do we get the rally here, and then do we drop? That would be the worst case scenario from a, options standpoint in terms of this boring bull market where it just keeps going sideways. All right. And then obviously the bearish, scenario, would be something like this, where maybe we test a low, we test a high again. Okay, we trade down. Maybe the Federal Reserve says something that the markets don't like. Then we get a spook and a low into May. That would be a huge opportunity to buy. So these are, again, I cover the catalyst. I've looked at, working off overbought conditions. It is possible that this market keeps being boring and we just go sideways. But, with earnings, with the Federal Reserve, and with short-term time cycles, I'm looking for an opportunity to where we see some really good scenarios in which to take advantage of and make some money. Okay. Thank you very much, and we'll see you next week.